I think we are in for a material downturn. So first focus on liquidity, cost cutting. But I do think as we've gone through our portfolio in the middle market buyout space that we do believe there'll be accretive acquisition opportunities. And so as we're kind of harboring our capital, a lot of it is actually focused on, okay, on that piece of it, not because many of the companies really throughout the buyout space done in the last 5 years really were conservatively capitalized from a covenant standpoint. And so there's less, knock on wood, I think less of the kind of default risk than there was in the 2001 cycle and certainly in the 1990-91 cycle. So I think there will be opportunities out of that. I will say in terms of where we're spending time, I think there are fantastic opportunities in the credit space. Distressed real estate, depending on where the government goes, I think is also an interesting area. But since we have a series of funds, everything in the credit space I think is quite interesting, given your average senior leverage loan is trading in the mid-70s. And if you look at historic default rates and historic recovery rates, that implies kind of an incredibly high default rate. I don't think we're going to have a default rate of that dimension or recovery rates that are extraordinarily lower than history, although that there is certainly risk in there. So I think on a risk-adjusted basis, that's a very attractive segment.
What about you, Bruce, from the corporate perspective?
Yeah, I think the few assets that we're holding, that we would ideally like to sell, we're just prepared not to sell them. Generally speaking, they're businesses that are generating cash flow. We're not in a rush, so I think we just have the discipline to say, okay, we're well along in this process, but things aren't going the way we expected them to go. We're in the middle of a bit of a perfect storm. Let's just go home for a little while. Mm-hmm. So I think that's the discipline we need on the sell side.
Is your focus at all changed on the buy side from operating businesses, or are you more into the ideals around intellectual property at this point?
Yeah, no, I think it's more the latter. I mean, for us, we're 90% of the effort that we make on deals is towards relatively small businesses that we intend to grow by putting them on our global business platform. And so it's the multiplier that we're looking for of a technology, not the operating fundamentals. We're generally not looking to drive cost synergy in the companies that we acquire.